I do think that we could have begun or are about to begun that melt up phase. So I've got to look at it a little bit more. And so, yes, you're going to see the stocks and everything's going to go like this in terms of this stuff, right? Everything's going to go up. People are going to see that and go, oh, look at how fabulous it is. Their fear of missing out, and they'll put all their wealth in these digital and intangible assets. And then when they do that overnight reset, everything crashes. Gold stays up there globally on average about 9 months before that too resets. But then the difference is that gold spot will start to go up again against everything else.
President Trump's domestic policy bill, now under debate in the House, is expected to add $3.4 trillion to the federal debt over the next decade. This comes on top of an already staggering $29 trillion debt load. While figures of this magnitude can seem abstract, the consequences are anything but. The benefits Americans enjoy today come at a cost future generations will have to repay, with interest. That interest is set to surpass $1 trillion next year for the first time in U.S. history, exceeding even the country's annual Medicare spending. Lynette Zang, chief market analyst at ITM Trading, emphasizes that governments can create unlimited amounts of fiat currency backed only by public confidence and central bank policy. However, when that confidence erodes, history shows a pivot back to something tangible: gold, what she refers to as sound money. The U.S. has taken dramatic steps during past financial crises, from the 1933 gold confiscation to the 1971 closure of the gold window. With the national debt now ballooning to $36 trillion, revaluing gold is being discussed as an unconventional but historically grounded option. Such a move could inject hundreds of billions into the Treasury's balance sheet without raising taxes or cutting spending. Zhang notes that if gold were revalued to reflect the accurate scale of global debt, its price might need to climb dramatically, possibly to $40,000 per ounce or more. The more debt that accumulates, the higher the valuation required to stabilize the system. She warns that when the time for a monetary reset does arrive, the key issue won't be the dollar price of gold. It will be the sheer volume of debt that needs to be reconciled. By that point, fiat currency may hold little to no value, making gold's role even more critical. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Gold retains its value because of that rarity factor, but because it does not get used up in production, right? And it can be broken down into different sizes and forms without any loss of that value. It's not how much gold we have, it's the number of these that it's valued in, right? So if you stop and think about what happens when they do that overnight reset and they take this stuff that is unlimited, they can grow as much debt as they want because you have the central banks buying the government debt, right? Modern money theory. So they take this stuff when confidence is gone and they reset it into this stuff, right? Sound money. So there's plenty of gold. You don't want an unlimited supply of gold. It would have no value. Just like these things have no value. This takes, what it costs them 9 cents to create a $100 bill that you have to work your butt off for 100 times harder than this stuff. Okay, so it is not the amount of gold that backs a currency. It's the gold in terms of the fiat wherever you are in the world. So if it reflected its true fundamental value of $40,000 an ounce, that would cover all of the debt on a global basis. It's probably higher in the US. I always do it on a global basis just because this is a global issue, but you can do it. You can determine what that is. No, that's why it works, because there's a finite amount of it and it is indestructible and it is invisible and it is decentralized and it is universal. It has every criteria to be a sound money above all central banks and all governments. There's a finite amount of it, so it just needs to be appropriately fundamentally valued. And it must be redeemable. So it doesn't have to be 100%. It could be 40%. And if I don't like what you're doing, I should be able to send in this and take out this. And I don't care about the other 60% because I know that it's garbage anyway. That tool would give the public back its power, that redeeming. If they say it's just backed by it, it ain't backed by it if you can't redeem it because they're just pegging it to an artificial price. But yeah, it doesn't really matter how much. I mean, you want a finite amount, so you don't want an unlimited amount. That does nothing, just like the dollars, right? That does nothing. It is because there's a limited amount and it's used in every sector of the global economy. It's universal. Yeah, it's just the price. We have plenty of gold. The whole world has plenty of gold to back the currencies. It just creates limitations. Ooh, what government want limitation on how much debt they can grow? None, but we need to make that happen or they just continue to rob us. Why is that okay? It's not. It's not. And by the way, when you're holding the gold and it goes to fundamental value, guess who has the power? Take your power back. And let's see. Wolf asks, Lynette, okay. The old guy asks, what if the government set the price of $1 at 1/1,000,000th of an ounce of gold? It's still a set price. The government is never going to give you honesty. That is not their job. The central banks are never going to give you honesty. That's not their job. The government's job, there was a time when the government's job was to support the individual. So the individual is at the top, and then the state's job was to support that individual at the top. And then the federal government's job was to support the states, whose job was to support the individual at the top. But everything has been flip-flopped. And now the job of the federal government is to stay in control and take even more control and transfer the wealth and the power. That's why I don't get political, because it does not matter who is in office. It can be a Republican, it can be a Democrat. It does not matter. When you study history and you study all the laws, what you see is every next president that comes in, regardless of the party, and regardless of whatever policies they're running on. Regardless of any of that, what you see is that this next politician moves the system along and entraps people more and more and more. So I don't care who's in office. I truly don't care, because it truly does not matter. So if the government sets the price, it's not real. It's not real. I wouldn't believe it. And I don't care. Unless that 1/1,000,000th of an ounce of gold was redeemable. That means you can take possession of the underlying gold. That's different. First of all, the more debt they grow, the higher that number goes, because they are going to have to repay this debt with, in this country, dollars that don't matter. So it could be 142,000 ounces or dollars. It could be 14 trillion. We get blinded by numbers, but the numbers really don't mean anything. Just like this 500 million Bolivar note that I can buy nothing with. So do not marry numbers, because what we don't know is what that cover ratio is going to be. In other words, here's all of this debt. How high do they have to push spot gold in order to repay all of that debt with dollars that have no money? So they could do it 1 or 2 times, right? For example, back in 33, they had grown so much debt that they really should have revalued gold to the 42.22 that they finally did in 1971. But they've been behind the 8 ball every single time. Why? Because they did not think that the public would accept that revaluation at that level. So they took $20.67 and they did a $35 revaluation. It wasn't enough. That's why they had to revalue again in 71, but still wasn't enough. But that 42.22 is why the new bullion coins have a $50 face value. You can't buy them for $50, but I bet you could sell them all day long for that, because the spot market is different. So that first part of it, by the time they do it, what's important in here is how much debt they grow, not that number. Because once it gets to whatever that number might be, everybody in the world is going to realize it really has zero value. So that's number one. Number two, you're assuming that it's based on paying off all U.S. debt with gold. It's based on paying off all global debt with gold. That's where I get my $40 from. Now, probably the 142, if I had to guess, would be the level of debt that we have to the gold holdings that we have, because that's higher, and it could be, but it's just a number. It doesn't, just like this, it doesn't really mean anything. So let's see what it is when we get to it. But by the time it gets to this level, you're not going to want to convert it just for dollars. You'll convert it to pay off your mortgage. You'll convert it when it's the right time to buy income producing assets. You'll convert it for those opportunities that are going to rise as we switch from this system into the next system. But it's not to hold those dollars, because at that point, everybody knows it has no value. So it's to pay off all debt.
Lynette Zang warns that we may be entering a meltup phase, a period where asset prices surge across the board, from stocks to cryptocurrencies, creating the illusion of economic strength. While this may appear to be prosperity on the surface, Zang views it as a trap designed to keep investors tethered within a system that is fundamentally flawed and nearing a reset. U.S. stock markets kicked off July on a strong note, with the Dow Jones S&P 500 and NASDAQ Composite all rising on Thursday. The S&P 500 gained 0.7%, the NASDAQ climbed 0.8%, and the Dow rose over 0.6%, adding to fresh record highs set earlier in the week. The rally was driven by a better-than-expected June jobs report, which highlighted continued strength in the labor market. However, the robust data also reduced the likelihood of an immediate rate cut from the Federal Reserve. Despite the optimism surrounding equities, Zang cautions that these gains are part of the larger illusion. When the financial system resets, she argues, only tangible assets such as gold and silver will retain their value. Stocks, bonds, and cryptocurrencies, in her view, will not survive the transition. Supporting this perspective, recent research from Goldman Sachs highlights a significant imbalance in market allocations. Global gold ETF holdings currently represent just 1% of outstanding U.S. Treasuries and a mere 0.5% of the S&P 500's market capitalization. Goldman notes that even a modest reallocation of capital, say 1% of Treasury holdings moving into gold, could double the demand for gold ETFs. Let's get back to the interview.
Gold spot will start to go up again against everything else. I really do. I've been dying to do this. So I'm just going to give myself a little note, and so I can show you that. I got to show you what that looks like. I'll get there. Oh, God, if I could clone myself, I totally would. But yes, gold will outperform. It'll outperform on the way up. It might not perform everything on the way up, because remember, this is also about keeping you in the system, but it will 100%, a gazillion %. I'll put my neck on the line for this one. When they do that overnight reset, gold is the only one standing. Gold and silver, but mostly gold. The only one standing. Not your stocks, not your bonds, not your cryptocurrencies. Gold and silver are the only ones standing. And Joseph Selch asks, how much of my retirement income should I put into metals and how much in the stock market? I gotta tell you, I don't have anything in the stock market. Now, you do have to understand that I've been living my life in this arena my entire life. I mean, seriously, since I was 10, right? And I'm 70. So for the last 60 years, which means that I have a much higher level of comfort than most people would. I've been a banker. I've been a stockbroker. I know how to read the technical language of the markets. And yes, have I missed runs? Yes, because I'm not a trader. I don't want to go in and out. I don't want to look at it. I know that what happens is when things implode, it takes everything with them. I was there on Black Monday in 1987. I know what that smells like, tastes like, looks like, and I'm going to tell you, as safe as you think something might be, when you get a Black Monday, everything implodes. But the flight to safety asset, and here's the kicker. Back in 87, that flight to safety was into gold and into treasuries. But look at what's been happening lately. The flight to safety is not in what we think of traditional safe haven assets. That is what has been shifting. Yes, into gold, but not into treasuries, not into yens, not into dollars. These were what, traditional will go back thousands of years. And yeah, it's only been gold. But since the fiat system has come out, it's been gold and dollar, and they want you to go into dollars and treasury bonds, which is debt, for goodness sakes, and the yen. I mean, this is insanity when you really think about what they're trying to tell you is safe, is something that they can create literally for no money, for zero cost. Our government, our central bank, can create as much fiat money as they want to. You know why the true fundamental value of $1 is zero? Because it doesn't cost anything to create. It's not rocket science. It's just a fact. Just a fact. So what does that mean? That means that anything you can only convert into dollars, like stocks or bonds, or cryptos, but show me something different. That's the true value. Big fat zero. Sorry, I know people want me to say something different, but I can't, because that is what history has taught me. So I don't have any stocks. I'd put it all into, and it depends on your retirement income, because obviously you still need to eat. Built on the Rock Productions. She's lying, because we all know all commodities will retain value. Really? Hard assets are barterable. So let's talk about barterability, because that's what you're talking about, right? And what is barterability? It is a coincidence of wants. So that means that while in some ways, first of all, I'm not lying, because how many times can you lie to and you don't know the truth? And I've been studying this crap my whole entire life. But does this glass commodity, this tangible asset, does this lose all value? Well, no, because I need a glass to hold the water, because I can't do it really well with my hands. Maybe I'm going to be wrong this time. Maybe so. Can't guarantee it, but I don't know. And there's just 4,800 times, 100% of the time, this is what happens. Could this time be different? Sure, Zach. It could be. I don't know that, and that's not within my control, but it's probably not different, because it never is. And DL Blue 65, if they control spot price, how does gold, silver ever go to fundamental value, which my strategy is calculated on? Love that question, DL Blue. Because this is a con game, right? And so con games require confidence. And when the public loses confidence in the money and in the system, through rapid inflation, in order and in efforts to regain that confidence, they bring out that overnight revaluation, and they tell people this is going to fix everything. So if this, I'll show you what I'm talking about. Okay. This is a 20 Bolivar bill that was created in 2013, right after a reset where they lopped off 6 zeros. I could do this. And I could actually probably do it reasonably easy. Okay. They lopped off 6 zeros by 2020.
Every financial era ends with a reckoning, and this one appears to be approaching its tipping point. The illusion of strength in traditional markets may temporarily distract from the deeper cracks forming beneath the surface. Unsustainable debt, weakening currency credibility, and historically low gold allocations. When sentiment shifts and trust evaporates, the capital flow may redirect not by preference but by necessity, toward assets with intrinsic permanence. The numbers may already be signaling that shift. The question is whether enough eyes are open to see it. Are we witnessing the early stages of a monetary migration, where paper loses its privilege and real value reclaims the spotlight? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.